Hello and welcome to Market in a Minute. May the 16th, 2025. Not a good day for Asia Pacific as fading optimism about US-China trade talks and worse than expected economic data out of Japan soured sentiment across the region. But we are more interested in the Pakistani market. It spent all week trying to recapture the April 4th high. So let's see how successful it's been and what to expect when the market opens next week. Okay, so let's see what's been happening here. Remember last week, just when the market was about to enter official bear market territory, it bounced off so strongly off of the 200-day exponential moving average. Then there was a weekend and the big gap up after the war. But since then, it's been trying to make a desperate run for this April 4th high and falling short. That's when we started looking at the momentum indicator. It's when the price action stops telling too much that that oscillators and indicators start telling more. Now, for all looks and purposes, the market having crossed all important moving averages in this week, the 50-day, the 100-day, and the 200-day exponential moving averages, would be in textbook technical uptrend bull market. But if it is a trending market, but that begs the question, is it a trending market? That's when we look at the oscillators. And we've been mentioning over the last week that we've been looking for a break above the 60 level in the RSI. That, however, has not happened yet. Once again, even though the market recorded the highest ever close on record yesterday, it was still not able to break this barrier, which is what we've been looking at to see if the market is really in trend. The good part is that the volatility as measured by ATR has been loosening over the past few days. Now it's still above 3,000 points. Today, however, despite the 3,200 plus point ATR from the previous day, the market only oscillated about 1,000 odd points. Today's behavior is better seen in the 5-minute chart. Let's see where the market started. Let's look at the total range of the day. It's about 839, 840 points. So volatility is coming down, which means that the market will not have as wide and as wild ranges as it has had over the last week. But the question still remains, does it have enough push or enough momentum to break this high? For that, again, we'll be looking at this point. If the market breaks above this, it will have enough push to make a run for this. Until then, our eyes are locked onto this. Remember also last week we looked at the OGDC stock, which we consider a bellwether stock for the market, the one with the largest market capitalization. When we last saw this, it was below the 200-day exponential moving average. And the question was whether the momentum of the market over here, which jumped off of the 200-day EMA, would carry the stock up or the weight of the stock would carry the market down. Well, we can see that the stock market momentum combined with the buoyancy from the war pulled up the stock, not just above the 200-day exponential moving average, but also above the other two more important moving averages, the 50 and the 100-day exponential moving average. But just like the index over here, OGDC is also facing the same momentum problem. It's been unable to break above the 60 line in the RSI. And even though it is above the most important moving averages, we cannot really say with confirmity that it is a trending market just yet. Once again, the price action of the next week should tell us where both of these are going, whether the index has enough fuel in it to move past this barrier, the RSI, and the last all-time high. If it does, whether it will drag the bellwether stock up with it, or will we see a reverse action from that? Only time can tell. We'll be watching very closely, so keep an eye on these levels and this level as the next week opens Monday. Thank you.